Well, let's get started. So, obviously, big day today. There was a drop this morning by Tesla with some news about their production delivery. They hit 495,000 vehicles produced, 484,000 delivered. And that means for the full year 2023, they had 1.81 million, which is above the guidance that they give, which is 1.8. This is in a year that's really tough. Supply chain issues, not as bad as it was the year before, but certainly interest rates were really high. And this beats the expectations across the board, and it's still right on target with the average growth 50% that they were asking for. So that's very good numbers, and we can break down the details. Between the other models, seem to have an increase of 5,000 deliveries more than production. And the other interesting thing about the note was the subject to operating lease accounting was 2%, which is much lower than they've ever had before. So we can kind of explore that further. So Jeff, why don't you kick us off? Tell us what you when you saw these numbers earlier.
Yeah, it was great. Tesla, I mean, they've been growing quarter on quarter, and now it was nice for them to meet and exceed all the consensus views out there because there's multiple consensus views. There's an Tesla analyst compiled consensus. I think it was 4080. There was another one out there, 473, and then there was another one that was like 83 or something. So there's multiple views out there, and Tesla beat them all. And so that really silences a lot of the critics, and it just while everyone's not necessarily focused on the quarter in quarter out numbers, there is it does move the stock price in the short term, and does get a lot of media attention. So there's really nothing the media could say about this. They outright beat everything, and it really, to me, it does a couple of things. It kind of drowns out this consensus that people don't want EVs anymore. That's just what the media has been espousing for the last couple of months. As soon as basically GM and Ford and VW and others signaled that they were pulling back on investments and moving more to hybrids, their partners in the media have all stood behind them and supported them and said, yeah, people don't want EVs, they want hybrids. By the way, BYD put up these pretty big numbers for total shipments, including hybrids, but their battery electric only, their pure battery electric business grew 70% year on year, and hybrid grew at 50%. So people actually want EVs, if you start looking at the breakdown of numbers. And I think EV adoption rates are going to come in pretty strong, maybe between 8 and 9% in the US. Again, that's going to be 60% growth from the prior year. So that's going to be a big number. So yeah, all around a good thing. As the lease numbers were low, they probably could have delivered 490 if that ship didn't get returned, in Australia with the bugs. When you start, looking at it, this is 1% variance in the number. It doesn't really change the long-term or even medium-term trajectory of the company. The company is strong. The financial results will be strong. The S and X numbers were much higher than anticipated. That was another story that was being perpetrated, which was, hey, they did these price cuts in the week 1 of September, and why weren't the S and X numbers instantly higher? And I remember telling people at the time, I went and put in an order. I received an X, but I actually put in an order to upgrade my S, and they gave me an October delivery date. I'm like, well, that's the answer to the question. Tesla did a price change week 1 in September, and really, the only people that were able to take advantage of that were people that took delivery of an inventory vehicle. If you ordered a new vehicle, you weren't going to get it that quarter, and now all those people got those S and X's in Q4, and the number was a blowout number. So that should be good for top line and for margins. Yeah, it was a great report from Tesla.
Yeah, great report, but it looked like that it was pretty well expected, right? The price today, Tesla stock basically was flat, even pre-market was flat. And I'm just curious, what would have happened if they were even just a few thousand below estimates? What would happen? But in terms of the as institutionals, it beat their consensus, and yet you don't hear much, very many people talking about it. I think it's they're just reporting it. They're not nobody's jumping up and down, except for we are. I think that that's obviously really good. That with the 5 to 6 thousand vehicles that were turned back in from Australia coming from China because of the stink bug infestation, if that landed, it would have been at 490. The Ford car could have delivered over 490, which is, very close to the actual production. That would have been amazing if the two of those numbers were so close. Already, they're pretty close, right? Even at the way there's now.
Yeah, no one's ever going to remember that, and it's not a material. It's material for that quarter, but it's not material in terms of the operating performance of the company. And then today, the Nasdaq was down, I think, over 2%. So that was the driver. If this was a normal trading day, Tesla would have been down $10. So the fact that it was basically flat
Okay.
tells you the market actually liked liked the production and delivery report, left Tesla alone, and it destroyed the other Magnificent Sevens for the most part.
Okay. And then this other models, right, which includes some number for the Cybertrucks, it was 5,000 more in terms of delivery in overproduction. So they use inventory, Jeff.
Yeah,
How do you interpret that?
yeah, they burned through the rest of the inventory, and I would expect that with that kind of pricing move. I would expect them to be able to move through any inventory. So yeah, it's great. People people love the S and X, and so if you price it at those levels, I think it's gonna fly through, and I think it's well above. I think they're making above 20% gross margin, but I haven't really thought about that too much in detail on those sales. So yeah, and yeah, this is a big quarter. They transitioned China on the Highland. The China numbers were strong. The China went out with very strong numbers. And again, even as the China competition increases, Tesla is having record months, and they're continuing to grow. People want Teslas in China. If they're looking for a sedan, they're looking for a crossover, they're going to get. They want that product as long as they can afford it in that price tier. What the Chinese competition is doing is they're definitely dominating below that that price tier below 32 32,000 US dollars, 35,000 US dollars. They're doing better. But yeah, Tesla's strong in China, some really strong months, and number one positions in Norway, Denmark, and you know they're doing exceptionally well. And again, they're really just they're still pretty nascent in distribution. They're really not in anywhere close to full distribution. I'd love for Tesla to comment on that at some point. But I still think they're going to be able to expand distribution and continue to grow. And again, if you look at North America, for example, if this adoption rate grows from like 9% to even 12%, maybe the rate's going to slow. It's only going to grow 33% next year. If it goes to 12% adoption rate on a 16 million unit SAR. That's um, you know what is that? That's close to 2 million EVs that need to be uh, manufactured and sold in North America, and the only EV manufacturer that's growing production capability is Tesla. The other ones have pulled back, and the more EVs they ship, the more money they lose. So when people are kind of wondering, like, how's Tesla going to grow from 1.8 to 2.4? I mean, I could see them getting half of that in North America. But we can discuss that later.
So 2.4 is still your well,
High end.
wait,
That's my high end.
that's your
I'm my high end. My high end's 2.4. I have a midpoint. I have a 2.2 to 2.4. I think Tesla's gonna come out with a range. I hope it's 2.2 to 2.4 or 2.2 to 2.5. And I think, yeah, I'm on 2.4. Pretty. I mean, I'm sorry. I'm between the 2.2 and 2.4. I'm fine with that.
yeah. Larry Goldberg has been pretty vocal, and he's very, very confident we're going to hit 2.4, which is I think the highest that I've heard anybody else talk about what they expect for 2024. And then, yeah, the next thing, of course, is what is the guidance? What would Tesla's guidance be? They're going to announce that on January 24th, which is 2 weeks from now. Wait, yeah, 22 days from now, 3 weeks from now, they'll announce their guidance for 24. And then you and I had a show recently where we're both kind of feeling like, we haven't heard Tesla use say verbally, but if you look at their hiring, you look at the activities they're doing in their factories, just look at some of the actions they're making, it sure does feel like they're still moving forward. I mean, I don't know if this is a rumor about India, that Elon Musk is going to India. The prime minister said that they're having a meeting there in January, and they're just so much smoke talking about that there's going to be an announcement, some sort of gigafactory there. You've got the governor of Nuevo León talking about all the permits are done, that they're having weekly, daily meetings with Tesla about what they're doing with the factory. That seemed to have kickstarted moving forward as well. You've heard about the expansion of the Megapack factories already happened in China. And then there was a discussion about the expansion in China, another new facility for China to expand their factory. That was approved. They're moving forward. Things are happening. Elon did say very positively that the Gen 3 platform is much more advanced than in advanced stages, and that he's walking the production line plans regularly, checking on it. So, we need, you've been saying we need to hear Elon step up and say something positive. Otherwise, if he doesn't say anything positive, but they still guide, and you were saying that you think that he's going to guide to 2.2, likely something, or that they'll give a range. This is what they did last time, 1.8 to 2. This time they'll probably say 2.2 to 4, right? That could be the most likely thing.
Yeah, and and certainly, as you described, Tesla's actions are pointing towards being more bullish. Their actions over the last 18 months weren't, right? They were doing the first company to do in tech to do layoffs. If you remember, I think in June or May or June of 2022, they were, leading out and kind of ahead of the pack. And then they started slowing down factory expansion. We were trying to hear about what's going on in Nevada, what's going on with Mexico, and they now they came out and they said they slowed some of that stuff down. So all that stuff seems to be respun up. And then the other thing that Alexander does a great job of tracking is all the hiring, all these unique roles. There's an athletic trainer role. I think there's some really interesting roles that you would not be hiring if you weren't in an expansionary period as a tech OEM. When you look at some of these listings, they're hiring in the factories, they're hiring in engineering. They're definitely building out that bot team, and they're building out the dojo team. This is all expansionary hiring to expand and grow their business. So my point is their actions are pointing towards a more bullish Elon for the earnings call. Whether he is bullish or whether he's more neutral would be the case. If he's negative, then he's going to be in direct conflict with what his capital investment and his resource investment activities are showing, and that would be bizarre. So I don't see that happening.
Yeah. What would be a bullish target if Tesla came out and said we're going to hit 2.4 million cars in 2024? Would that be bullish? Would that be above expectations and people would be excited about that?
Yeah, I think the 2.2. I think the street's at 2.1 or in change. I think if they came out with a 2.2 to 2.4 or 2.2 to 2.5 or something like that, that would be bullish. But it's not only the numbers; it's what he says on the call and how he speaks. We should be in. By the time we get to that call, we should have 3 weeks worth of sales data. Now that the IRA is going to point of sale, I know there's some IT stuff that they got to get through to make that actually work. So we should have 3 weeks of data there. We should have, another Fed meeting, I believe, and we've already had 5 months or so, 6 months of them being on pause, essentially. So now, everything should be lining up for a more bullish Elon, and that's what the street would want to hear. If he's bullish, certainly if he's neutral, and But if he's bullish, then yeah, then I think the market would react
Yeah.
favorably.
I'm not going to be optimistic that he's going to be bullish. I think that, he's mentioned this already. He's got PTSD. He's got scars. The factories is something he's very concerned about. He doesn't want to double down too quickly. He's going to probably just, we'll see. Does he hold back and doesn't say anything? But I'd be shocked if he was super bullish. Although you've got Tom Lee of Fundstrat, you've got Dan Ives of Wedbush, basically talking about a tech boom, bull market is on its way. Welcome, Emmett. You want to come up and join the conversation?
Hello, everyone, and Happy New Year. I'm pleased with the results. I would have, I was like, whew, we broke 1.8. That was like, as long as we did that, there's peace in the world. And we've got peace in the world, at least in the Tesla world. And I went ahead and ran my PERT analysis, basically my estimate for 2024. And as of right now, my pessimistic number is 2 million. My realistic number is 2.4, and my optimistic number is 2.7 million.
Whoa, whoa, whoa. This is okay. Like Larry Goldberg was a 2.4, and now you're optimistic. I get it. You're still okay. I'll keep you at 2.4 because that was your realistic number.
Well, the PERT comes out to 2.38 million. So doing the PERT analysis, it comes out to 2.38 million is what the estimate is. But I am happy to talk about why my optimistic is what it is.
Oh, yeah. Go for it. I love it.
Because all we've done is increase the capacity in all the existing factories, more lines, more efficiency. Having a year that's 50% growth for this specific year, I think that's within the realm of physical possibilities. And I think the only reason they won't get there, because from a talent standpoint and from an infrastructure standpoint, I think Tesla themselves has the ability. It's supply chain. If they can't get to 2.7 million, it's either going to be supply chain or it's going to be demand. So that's how I got that number.
Okay, I really want that to happen. I've got to bring Brian White up here for my Tesla weekend. Dude, you hit it out of the park. He's one of the retail Tesla analysts out there that is just so, so, so close. One of the best. And probably you were the best in your estimate for this quarter, right, Brian? Can you tell us what your numbers were?
Sure. So I actually found today that Matt Smith from Rebellionaire is the one person who got closer than me this time. He was off by 0.04%, and I was off by 0.46%. So I came in at 482,261. And there are people you will find who get closer, but I call them guessers. And one of them I even asked, "What you should publish your methodology?" And he said, "My methodology is is common sense and good luck." And it's like, yes, that's about right. So it's getting trickier. When the company was smaller, you could, I know channels like Kilowatts would hang out outside the factory and count trucks going out to get a pretty darn good idea. And then when it was just Fremont and Shanghai, you could watch from the drones and get a pretty good perspective of what was going on. But now you've got 4 factories and that number of non-Model 3 and Y vehicles, that big category of all other vehicles. Does that include semis? I mean, if it does, it's a rounding error, but it may. And it gets more and more complicated. So I expect the error margins to increase over time. But it's interesting. It's an interesting challenge. And someone today asked me, but at the end of the day, does it even really matter? Does anybody, will this change anything? And what I like to say is, if you are, there are aspects of engineering that may not matter to you that you look for anyway, because it's a sign of a good product. And if my tolerances are tight when it comes to this part of my analysis, I think it's reasonable for people to assume that I look at everything just as critically. And I've had many quarters. I've had, of the 3 years I've been publishing my projections, I've been the closest at least 3 times, I'd say. And I'm not always in the middle of the pack. 2 or 3 times I've been an outlier. And if you're never the outlier, I'm curious if you're even running your own numbers. But it's a fun game we play, and it's a lot of fun to watch.
Brian, I mean, I would definitely use more of a numerical analyst, like you're actually like pouring through the numbers and trying to figure out where's production coming from, counting ships. So you're in that category of people that are doing the work. And then there's people like me and others, and maybe Matt does a lot of financial analyst work, and I love him. But yeah, I think if you were 0.046 off, you're definitely, to me, you're right on the nose. Congratulations.
Thank you, thank you. It's gotten so the biggest factory is Shanghai, and Shanghai we know the numbers. If you somehow miss on the numbers for Shanghai, I don't know what to tell you. They're published. You can get usually within 7 days of the complete picture from there. Shanghai is very knowable. The other 3 factories work very differently in very different ways, and so there's a lot to measure and a lot to figure out. And I'm definitely looking at all the reports of the ships. I follow the X accounts that monitor ships in travel, and we know what's going on where. And as the delivery wave unwinds, one thing I got a comment this morning on a video that wasn't even about this, saying, "Oh, the production is again much higher than deliveries, and that's a real problem." No, that was 2 days of inventory. They increased inventory by 2 days. And this isn't inventory sitting on lots. This is inventory in transit, which is a world of difference. The whole industry has increased their days of inventory, and yet they are still below pre-pandemic levels. So this is just not an unusual thing, and it's just kind of how it goes. But thank you, Jeff, for the kudos.
Since we're talking about production delivery numbers, I might be the only one that's a little bit, I don't know the right word is, upset or just disturbed. I don't know. That's not the right word. You know how people will start giving you their forecast for production delivery numbers, 3 months ago, and then 2 months ago, and then 1 month ago. And every time they just adjust it. And then at the very last week, they'll adjust it. And so why did it matter what you were saying 2 months ago? Doom and gloom, things are terrible, and then all of a sudden, oh, I'm going to bump all the numbers back up again because this is what I'm expecting in a week from now. So I don't know.
So I would say look at it for consistency. I know there are accounts that will post either wildly high or wildly low numbers and then get right back into where everyone expected them to be, and that raises questions to me. Questions that I certainly am not qualified to answer, but it's a head scratcher. Sometimes I will publish early in the quarter and mid-quarter numbers to show you how mine changes over the course of a quarter, because there can be unexpected events like retooling that we may not have seen coming. In what was it, last quarter, not in Q4 but in Q3, I published an early number showing that it would be about flat, because other people were saying it was going to be gangbusters or very low. And I said, we've got this big retooling coming up for the Model 3 refresh in Shanghai that's going to take a little bite. And it happened. And then it was announced. And, I know you saw it because we had a show on it where I was the first person to say, guys, there's going to be retooling this quarter. And then 3 weeks later on the quarterly call, Elon confirmed it. So to me, it's not about getting the right number as much as it is showing my math so that you can look at my assumptions and my conclusions and decide if I'm right. Because if you look at the Wall Street guys, they just give you a bottom line number and that's it. And you don't know how they got there. And you don't know what it's made up of. And you don't know all of us are going to have incorrect assumptions. And if you can look at it and see something I can't, then you can be even better than my numbers.
Yeah, you were one of the very first that told us that you're going to expect a reduction in numbers for the quarter because they're going to shut down some of the production lines for the Model 3 Highland. It was a shock to me. I wasn't even thinking of it, and then it happened. So let's talk about Model Y production shutdown potentially in 2024, even the Model 3 Highland. But before that, do you know what my projection is for 2024? My projection is going to be deliveries of 2,529, 464. Because that is exactly a 50% growth. So am I going to be the only one that's going to be bold enough to say 2.5 million? That's a little bit too bold. But are we all saying, is everybody here saying that there's no chance that Tesla's going to hit a 50%? Now, again, remind everybody, it's average, it's multi-year over years. And so there's no need for them to hit 2.5 to prove anything. But because this is a transition year, they don't have the Gen 3 platform yet. Like I said, there's going to be a production shutdown for the Model Y, Highland maybe in the end of 2024. So, but yeah, are we saying nobody here expects them at all to hit 2.5? Everybody's within a 2.2 to 2.4?
I want to remind everyone that the year that they made that 50% rate was 2020. So that's our baseline. The number they hit for 2022, we need to average that forward at 50%. It's not 50% year over year, and there's a big difference.
No, that's exactly right. I was looking at Dylan Loomis's chart, and he actually took the exact words that Tesla said. What they said was, in 2020, they said over a multi-year horizon, we expect to achieve 50% average annual growth over multi-year horizon in vehicle deliveries. The rate of growth will depend on our equipment capacity, factory uptime, operational efficiency, and the capacity and stability of the supply chain. And in 2020, they hit 499,000 cars. And so for that to hit, again, if they were to hit the 50% growth, they would need 936 in 2021, 1.3 in 2022, and then 1.8 in 2023. That's what they needed to do. And that's what they've been doing. They've been hitting, I'm sorry, those are the lower numbers. 749, 1.1, and 1.68. And then yet they hit it above that for those next 3 years.
Do you have that chart that you could share on a post?
Well, it's under Dylan Loomis tweeted it out, and then I've actually presented it on a thing. But yeah, I guess what I need to do is find his tweet and then post it up on here. So somebody take over while I look for that.
Happily. So are there any of the people on the panel, anyone else want to add additional flavor or color to something that's been discussed or something else that's on your mind? I'll start with Jeff. Oh, Brian, go ahead, Brian. Never mind. Go ahead, Brian.
Yeah, sure. I was just going to say on the 2.5, I don't see it for 24 unless we see interest rates drop sharply. If interest rates come down sharply, we can employ some of the excess production capacity at Berlin.
You know, Brian's talking. I can't hear him, so I'm going to drop down. And Herbert, if you can pull me back up, thanks.
Yes, okay.
Yep.
Sorry.
Yep. So I think there's a lot of production capacity that could be brought online. Part of that extra 0.5 million we're looking for can come from the Cybertruck, but not all of it. I don't think they can ramp anywhere close to 500,000 in the first year. I think it's going to be more like 90,000 is my projection for next year, based on conversations I've had with one part supplier. So there is a good chunk can come from that, but without interest rate reductions or a sharp price decrease, I don't see 2.5 million being in the cards.
Brian, you shared several great things. I'm going to kind of go from them in reverse order. So you hit that 90,000 number at the end of 2024. In your analysis, did you have a run rate for December 2024?
Oh, no, I don't. But I would assume it's going to be a more or less linear ramp through the year. So no, I really don't. I guess I would say, it'd probably be at 25, 30,000 a quarter by the end of the year. I guess it would be higher, wouldn't it? It'd be 30, 40,000 by the end of the year, setting us up nicely into 25 for more serious volumes. The trick with Cybertruck is we don't know yet what the production constraints will be. I imagine Tesla knows this answer, but I don't know how far beyond the company that knowledge has been able to go. And I haven't heard anything credible yet.
All right, completely fair. And I don't have a number right now at this moment either, so I'm not going to answer the question I just asked you, but I was just curious. Now, the second thing you mentioned, I want to add some additional color to. You mentioned interest rate, and when I had spoke about my estimates, I talked about demand. I agree with you that interest rate is significant in demand. Very high likelihood that the interest rates will start to come down. The Fed has implied there'll be three, probably small, but three cuts during the year. They might be a quarter or an eighth, but they'll be cuts. So they seem to be trending down. But there's two big things that are going on right now. One is obvious, and that is the point of sale discount. So any Tesla that qualifies for the federal discount will get $7,500 for a brand new Tesla at point of sale. And the other thing is more and more people are aware that if they do the lease approach, so if they have a business, they have an LLC, and they have their company lease the vehicle, they also get the full point of sale as long as the company they're leasing from. But if they're leasing it from Tesla, they get the point of sale, but they have to, right now, currently, my understanding is they won't be able to buy it or won't be guaranteed that they can buy it at a fixed cost at the end of the lease. But there are third-party leasing companies that will purchase Teslas and lease them to companies. And if you do that, you can get the full tax credit. So I think that's going to help with the demand, and there's a better chance that the demand and the production capacity will line up.
So I think a lot of people have a mental roadblock when it comes to leasing. I know I definitely do, even if there is a potential for buyout at the end of it. The 7,500 point of sale credit, I would still say exercise extreme caution, because even yesterday in a private group, a bunch of us were discussing, we can't find guidance from the IRS that says everyone will qualify. I know that's been a popular talking point. I know when USA Today published saying everyone qualifies, everyone, even if you have no tax liability, and I cannot find that. The IRS document they linked to did not contain anything about that. It referenced 2 or 3 other IRS documents, which I went and read, and none of them mentioned anything about it. So I am concerned that some people may be taking that $7,500 up front, who will then end up on the hook to pay it back at the end of the year. But without clearer guidance, I don't know how much that's going to help. Most buyers, I think, will be in a position where they will have some tax liability to offset. But even if you've got $4,000 in tax liability, if the end of the year comes and you got a $3,500 bill, it's going to be very frustrating. My bigger concern is losing the credit on 2 of the Model 3s, the 2 more affordable Model 3s, making the performance model now cheaper than the long range or standard range. It creates a weird situation where I just don't know who's going to be buying those 2 models.
Yeah, that
is there a chance?
You're back, Jeff. Go for it, Herbert. Go for it.
No, sorry. Sorry. Is there a chance that with Model 3 Highland, if that's introduced in the US, that they can actually make it so that it might be eligible for the IRA rebate?
It all comes down to the batteries. Where are you getting the batteries? The trick has become, and I think you and I discussed this before, was that the 4680 was supposed to be in production at a sufficiently high volume that it could take over all the production in Texas, which would leave enough Nevada-made 2170s to supply all the cars in Fremont, and we haven't gotten there. So 2170s from Nevada are still going to Texas and leaving a shortfall in Fremont, which they're supplementing with LG cells from Korea and CATL LFP batteries from China. And those 2 cells do not qualify. So batteries really are the constraint, and we haven't seen Panasonic increase their production in a substantial way. I imagine they're always dialing in efficiencies and increasing production a little bit, but we need, a 20, 30, 40% increase to guarantee that those cars will once again qualify. And we just haven't seen it yet.
Sat, welcome to the stage. And would you like to jump in?
Hey guys, thank you. Yeah, I just want to comment on the deliveries stuff. Is also like, I mean, there's a hyper focus on how many vehicles delivered, rightfully so, but I also feel like Tesla's business is expanding a lot more. I also look forward to how well they did on the Tesla energy side and their gross margins. And there's certain comparisons that are being brought up with BYD and so forth. And I think it's great they're making EVs and stuff, but I also think the quantity isn't the whole picture. And I feel like the quantity seems to be the most important thing that everyone talks about, and then, or at least most often. But like the gross margins kind of matter, and so I feel like Tesla maintaining that or doing better than the previous quarters, I think that would be a really good sign. So I also feel like Tesla won't make certain parts of the 50% if they don't get the Model 3, Model 2, or the compact car out. And I think when they do, for sure, they're going to hit it on average for the multi-year. But if there's one year that they're a little short or whatever, possibly, I think it's going to pan out in the long run when they come out with the compact car. But I also feel like that's this hyper focus on delivery numbers. I think we need to look at the finances and the gross margins as well, because the Model Y was the best-selling car globally, and it's double the price of, or almost triple the price of a Corolla. So you can't say that the units is the same or higher or relatively the same, and say the financial is the same. So I want to focus also a little bit more on the big financial picture and not just the delivery numbers.
Yeah, so what are the auto gross margin estimates for folks here for Q4? I think from what I'm hearing, talking to people, it's mixed. A number of people, most people think that it's going to be flat at 17%, even maybe a little bit lower. And then some people are actually saying, no, it's gonna rise at this point, and we're gonna actually see it recover and rise higher. Where do you guys sit on this panel?
I have more homework to do on it, but I don't know why it would be flat relative, given the increase in production, given the weighting on S and X, and given the low lease number, which will help with on the sales side more so. But anyway, I don't know why it would necessarily be lower. The only thing, I just haven't had time to analyze the amount of inventory vehicles that were processed, and was that in a significant. Was that number significantly higher than a prior quarter or not? Yeah, I think it would be on the higher side.
Well, one of the few that has said it's higher. Anybody else? Brian, do you have estimates of the auto gross margin for Q4?
I do not. I don't. I know what I'm good at, and I've never been able to develop a model that is very good for earnings. So I stick with production and delivery figures.
And speaking for myself, I'm not anxious to guess, because they have been ramping Cybertruck, and some of the factories are switching over to the Highland. My hope is it'll be the same. I wouldn't be shocked if it's a little lower, and I'll be very pleased if the margin's better.
Yeah,
okay,
I mean, I wouldn't say cumulatively, like all of them. I would say separately, because it wouldn't be a fair assessment when you're doing a ramp up the first month of Cybertruck. But as long as they're relatively in a similar range, I mean, they're ramping up the Model 3 refresh, and it hasn't come over to the US yet. But the Cybertruck was just ramping, so I don't think the Cybertruck is, if you include that, it may be a little bit lower possibly, but I don't think that would be a fair picture comparatively, year quarter or year over year.
Okay, so for 2024, in January 24th, when they do their earnings call, other than the guidance for, let's say, 2.2 to 2.4, whatever they say they're guiding in for, what else are you guys looking for? What kind of statements do you want to hear made? What kind of reports? They didn't break out the energy, which many people thought that they might have done that for this specific drop this morning. We still just got the vehicles, not energy. Any thoughts on what you guys would hope that they will do on the call?
My biggest hope is they tell us 4680 ramp is going fantastic, and that it won't be a limiting factor for all of 2024. That would make me so happy.
I mean, that's kind of contingent, like very important for them to even ramp up the Cybertruck. So hopefully they reaffirm that because I don't see how that's possible without the 4680 ramping up.
Do you guys think that energy is already built in for 2024? Um, Again, this is another one where I think the vast majority of the analysts are saying that they already know what energy forecast is, and it's already built into the stock price today for all of 2024. And then there's a few folks who saying no, they're going to be shocked at how much is going to show up at the end of the year. It's going to be lumpy, so there and you don't see the revenue recognition right away, but they're still going to be pretty well shocked. In terms of the kind of contracts that's being signed, the margins they're going to see, the impact to the bottom line. These things will, surprise folks by the end of the year. Do you guys think it's already built in?
I think they're going to produce way more storage than people are expecting. So I think from the production standpoint, we're going to be really pleased with the numbers if and when they disclose them. Because it's lumpy, there's a good chance financially we'll be surprised too. But I think I'm way more optimistic than the street when it comes to energy storage.
I guess the reason I'm asking is why did they not report it when they said that they were going to start reporting it? And right, that it was going to be part of the presentation already from now on. And certainly they'll report it. They'll break it out on the actual financials itself. But right, we were hoping to start seeing it on a quarterly basis. The reason is because it's just symbolic, right? It just shows that we're not just a car company. This is a car and energy company, and start reporting these things because it is already very significantly material, right? We're already at the 9%. It's already more margin percentage than the vehicles themselves. And it's just a path to show that, as Elon has pointed out, that energy will actually be the same size as the auto business is now, just the energy alone. So at some point, it's silly that we're talking about, 5,000, 10,000, 20,000 car difference when at some point you're going to have a whole new business that's going to be equal to the whole size that we're doing now. We're going to be double this pretty easily, quickly.
Herbert,
Yeah, I think they'll report
Go
it.
ahead, Jeff. Jeff, go for it.
I was just going to say, sorry about that. I was just going to say, I believe they'll break it out. And, I think we'll be pleasantly surprised, but I do think it'll be something lumpy. It'll be interesting when they break it out, if they start getting into forecasting of energy as well, because I think that's where the devil in the detail is actually being able to forecast that business.
Herbert, I think there's a sleeping giant behind the comment you just made. So, yeah, just from a production standpoint, I expect energy to do well. And the sleeping giant is the more energy that's online and the more customers that buy into the VPP, the virtual power plant, there's going to start to be exponential revenue growth that's pretty much pure profit just from that software-based energy arbitrage revenue. And I think eventually, just like credits have been a sleeping giant and they're always backed out, but the thing is there's always credits, and with all the manufacturers reducing their EV production, we're probably going to be making hundreds of millions of dollars in EV credits for the rest of the decade. Well, the virtual power plant energy, they're not going to be able to back out. They're going to have to count that, and it's just going to grow and grow and grow.
Yeah, the software monthly is already AI. It's just another thing that people are missing, that AI is already being sold and it's actually generating revenue for us today. There is revenue being generated through AI, and it's sort of the energy division at this point. So FSD, right, version 12, it's now started to roll out to 15,000 employees. And then what does that mean, right? Will we start seeing an uptick in the monthly uptake? Are we going to start seeing that recognized revenue recognition? Are we going to see that it's global, right? We saw that this is no longer FSC today is only being sold in Canada and the US, but we are seeing employees being hired. We're seeing it in the code that it's going to be, and the laws have opened up already in Europe and in China and Australia and other places. What would be the impact of FSD uptake increasing? Number one, it's a percentage, and number two, going global. Jeff?
Well, I guess I'll jump in on that. I think the problem we're seeing with FSD is it's still expensive. I mean, $200 a month, if you're going that route, is for many people as much as an entire car payment. And for people who don't necessarily drive every day, it's kind of a big ask. I don't know, you know, that everyone gets the utility out of it that we see in some of the online videos make it look like it's genuinely that FSD beta as it exists today is already damn near robo-taxi quality. And I know that experience is not universal. Um, if they, I think one way they could bump up revenue is by reducing the price of it and just getting more people to use it who might love it and keep it forever. I think reducing the monthly rate would increase the take rate significantly. But yeah, it's one of those difficult problems where it's not solved until it's solved, and a lot of people, I know a lot of buyers from the early days, 2016, 2017, who no longer have their car, who have upgraded to a newer Tesla because that's the people who were buying $70,000, $80,000 cars weren't necessarily holding the kind of people who would hold on to them for 20 years. Um, and I think a lot of those people feel a little burnt by the imminent 2 weeks until it's complete. So I'm still skeptical that that until something changes, whether it's reaching a level of completion that's more universal or just a reduction in price, that the adoption rates will, I think they'll remain low.
Well, I also think that when the interest rate gets cut, then it'll be a more of an option because it's an optional feature. They don't have to have it on the car, and the prices wasn't the same. The vehicle prices wasn't the same as today. It was much higher. So now that the prices of the vehicles are high and interest or low, and the interest is high, and if they cut down the interest rate, then there'll be more cash per month. So it would be essentially an option they can actually add to FSD. So I don't think it's going to be an immediate thing in terms of how the economic climate is and how an average person would think about their cash flow and every month. But when the interest rate goes down, it opens up more options because I doubt that Tesla's going to start raising their car prices like it was before.
Yeah, no, I think the global expansion is going to bring on obviously a tremendous number of new users. I think that'll also be symbolic of its stability improving dramatically. That the fact that they're ready to go global with it, the fact that it's gone out to 15,000 employees. I mean, these are human beings too, and they're obviously concerned for their safety. So this tells me it's past QA and it's fairly stable. And they're probably going to do any number of point releases internally until they get it rock solid. But it's pretty exciting that it is progressed to where it is, and some of the early reviews on it in terms of how it drives seem really promising. It seems like it really gets to some of the quirks that people see with using the 11.x series. So pretty excited to see when this rolls out. And again, the last number that I see officially reported by Tesla was that when they did their Q4 earnings last year in January, and they reported there was roughly I think 1.7 million Teslas on the road in the US or US and Canada, I'm not sure, but it was a 1.7 million denominator, and they had over 400,000 cars they said had downloaded FSD beta and were paying for it. So to me, like, that's the last reported number. Everything else has been miles. I know other people are sending out surveys to people like, did you buy it or not? I don't know how representative that is. So I don't know what the take rate is. And it just unless I go back to that number from Tesla, and maybe at some point they'll start reporting it again. But it was a pretty high number. It was 25% when they reported it last.
Yeah, I got 23 and change percent, but yeah, that's higher than I was thinking.
Yeah.
So
I think that. Go ahead.
Oh, sorry. Yeah, sorry, Hammett. So Elon Musk kind of announced that he's going to do this a special talk on X. about SpaceX, but he'll also do one about Tesla, and he'll talk about 2023 and 2024. Did you guys think that that's unusual? Because if you are already doing the earnings call, and that's where you're going to be able to say things, and you're going to talk about the business, or do you think that because it's not in the earnings call, it allows him to be a lot more kind of open and free? And why would he do this? Maybe he's just doing it because he wants to create an event on X, as a space is on X, but it could also be because he's kind of pretty bullish about what might happen in the future. Some people are thinking that's how they interpreted it. What do you guys think?
I think primarily, based on Elon's past behavior, he's doing it for recruiting for X and recruiting for Tesla.
By the way,
I mean, it's after.
he said
Sorry.
next week. He tweeted this out December 29th, and he said next week I will do a company talk for SpaceX, followed later by company talk for Tesla after the 10K,
Yeah, after the 10K will come out after earnings.
which is 3 weeks from now.
Yeah.
Okay,
So you may do the SpaceX one next week.
gotcha.
Yeah. So, yeah, I'll be interested to hear both of them. But no, I think I think so much of their town halls get leaked. I wouldn't be surprised if he's just like, I'll just do it. I'll just do it on X, and you just let everybody listen to it real time. Everything's getting leaked out anyway. So yeah, I wouldn't be surprised if he's doing that. And hopefully, yeah, there is a lot of good news to share. Again, I do think the energy piece of it is going to be bullish. Again, if the competitors are capitulating, someone else is going to be picking up and shipping those EVs. So maybe they've got signals on, where they see demand going. I mean, I've always said, and it's always proven true. Like, if you want to understand where kind of Tesla is going, and what they're thinking, look at their capacity and look at what they're installing in terms of capacity. And, that's a pretty bullish number. We know it's north of what they actually write on that piece of paper. It goes in the earnings deck. So to me, I don't understand the logic of people talking about 2 million units for next year when why would they have gone in and installed nearly 2.4 million? And we know in reality they're north of that. Why would they have done that? No, that's not a signature Tesla move to install idle capacity.
Yeah, what they actually saw was 2.56, wasn't it? Go ahead, Brian.
Yeah, and I would add to that. That's exactly right. If you look back at their production expansion path, it has always looked to outsiders to be excessive and pointless. Even taking the Fremont factory, that place was the biggest factory in the country at the time. Why on earth would this tiny little company ever need a cavern this size to build, a few thousand cars, maybe 1,000 or two a week? But that was never the plan. And we have to, I say we, no one in this group needs to understand this, but people outside this group need to understand that his vision is a little grander than most, and every crazy big thing he's done has paid off. The idea that you would build your own battery factory, why would you do that when you can just buy batteries off the shelf? And here we are, 10, 15 years later, looking at it saying, man, I wish we had built our own factory, because now we see that's the only way to do it. Why would you build factories in a whole new way when the ones that we've been using for 100 years work just fine? And the answer is, we got to cut costs, and we know how to do it, so we're going to do it. I agree entirely that the expansion we're seeing is not for fun. It's because they have every intention of using it, and these economies of scale, these efficiencies they're gaining, these new processes, procedures, and methods are going to allow the cost reductions to enable price cuts as needed to keep the machine moving as close to capacity as possible. And the compact is going to be the next step in that. And if you're a legacy car maker and you don't see this coming, my sympathy for you is limited.
So in that post, Emmett, you're right. He did, in that same post, I was talking about doing as company talk for Tesla after the 10K. He says, I will recap the talented team's amazing accomplishments of 2023. So that's, yeah, definitely this, you're right on. This is a recruiting. But then he says, and describe exciting plans for 2024 and beyond. And describe exciting plans for 2024 and beyond. So we love it when he does things like this. We'll see what he says.
I also want to add that I think Tesla is really efficient at their build out. So even though we can't see it when it's going to go into effect and using the expansion, they have a timeline for it. That's why they're really capital efficient at how they use the capital and add capacity, and they don't add excessive capacity or buy too much where they're not going to be using it in the relatively near future. And so the planning has always been relatively close to when they expand and they actually need to use it. And that shows in the gross margin of the per unit that they're producing on their cars. Most of the other OEMs are making EVs. If they have even a gross margin, it's in the single digits at max. They're not anywhere near. And then most of them are actually losing this negative gross margin. And yet they're still talking about making other factories or other lines and so forth when they don't even have one that's actually profitable. So I think when Tesla gets this kind of criticism, I think it's really unfounded. That's actually not the case in Tesla, historically speaking. They've always come to a gross margin, double-digit gross margin when they hit volume production. So they're very efficient at it. So the expansion that they talk about or we notice about that we watch very closely means that they're getting ready and they're set for it. And given that capacity, they're going to add accordingly, and they're not going to add excessively. So Elon said this years ago, even with the expansion of the supercharger, you spend as much as possible, but efficiently to expand the infrastructure. So I believe that's always the case, even with their production and their factory.
I have a question probably for Jeff, but Brian might be able to help. From a production standpoint, including downtime, how much longer do you think the new Model 3 is going to require in China? And then once they start rolling to Europe and to America, how much of an impact in overall production for the Model 3 will that be? Can you give us some kind of insight?
If you're asking how long it takes to ramp the lines in China, I believe they are already ramped. What we saw, when you move from an old line to a new line, you shut everything down, you retool them all, and then you go. But with the big delays Tesla saw getting the S and X retooled, they were afraid that would happen, and you can't do it with a cash cow like the 3. So what they did in Shanghai appears to be that they took one line down, got it running and ramping before they took the second line down. So that is what I assume that they are already doing in Fremont. They ran at absolute max capacity for as long as they could, and then shut down one line to retool for the refresh, and the downtime will be minimal. Certainly not zero, but minimal. If the question is how much higher will the throughput be on the new model versus the old model, my assumptions are less than 5% quicker. But 5%, still a lot of units. You're talking, tens of thousands a year, but not a big bump to the bottom line. But the real efficiency is the whole process is better, the cost is better, your margin can improve. You could keep the price about the same and still have a better margin, and that's going to be the big advantage that I see with all the refreshes and really all the new models.
Can you add any numbers to that? So it took them a certain amount of time to shut down that one line and then ramp it up, get it working, and then actually ramped up to the previous number where it had shut down at, and then they repeated it on the second line. Can you add some numbers? Because if you add some numbers, then we can start to extrapolate it to other lines in other countries.
Not really. We don't have good enough numbers to give a concrete answer, but I would say that the total downtime was 2 weeks. That was the target, where the one line was producing 0 cars while they were moving equipment around and getting everything in place. The ramp, I would say, probably 2 months, maybe a little over. And you can also look at that based on when the factories shut down for the pandemic, when they restarted, they had to re-ramp because it is a locomotive and it takes time to get it up to speed, even if it works properly. So I would say that a complete shutdown of one line for 2 weeks, a ramp of 2 months. So I would say that for a given quarter, you could see a total reduction on that model of 20 to 30%. But I would be surprised if it went north of 30, 35.
Did you guys see that this morning? There's reports that potentially the Model 3 Highland production line is already in test in Fremont. I mean, this is beyond just the sightings of the Shanghai decals of Model 3 Highlands here in the US, that it's actually got the VIN numbers that are, maybe assembled in Fremont. There's people who are saying that the retooling in Fremont's already happened. Robert Scoble, who's a well-known tech kind of a celebrity, he was speaking to an employee that worked at Fremont factory who told him just a few days ago that the retooling has already been done. And so he's expecting an announcement in January with the actual, production starting in March. So this is rumors. This is somebody telling somebody, but Tesla Roddy, who went and produced this report saying that this is more than just rumors. There's actually, a test line already in place. What's the likelihood of that?
This is purely conjecture, but I think not only is test production started in Fremont, but I think they're purposely putting on the China badge on the back so that if they're testing something on the street, no one will think it was made in Fremont. But Jeff, can you chime in on this
some
topic?
people said that.
Yeah, there's a lot of things you would do when you're trying to disguise something. You would cover it, or the VIN, though. The VIN is the VIN, so you go look at the VIN, and I think it's the 6th digit from the right, 6th or 7th. If it's from China, I think it's a C. Fremont's an F. So it'll be interesting to see that. But yeah, I mean, it's certainly possible. And the Model 3 refresh has, I think they said over 50% reuse, which isn't super high. It's not super low either. So that the more reuse you have, the quicker your downtime is, the quicker your ramp is. You're changing less stuff. But I'm sure they measure this. That was just one of the points I want to make. Good companies measure the time to peak volume of any operation, where you take it from 0 to peak. And they also measure things like the time to break even and so forth. So I'm sure this is something that Tesla's measuring, but in terms of that being public information, good luck.
So I'm not as worried about the Model 3 Highland production downline, but let's talk about Model Y. That's going to be a refresh. There's a debate amongst the community. Some people think it's going to actually happen soon, because you don't want to have the Model 3 Highland having all these new parts, and then you got the Model Y having its old parts. You'd like to have standardization as fast as possible. Other people think, well, they got the hands full. You got your Cybertruck, you got the Model 3 Highland. You're not going to do 2 production line upgrades in the same half of the year. You're going to wait to do the second half of the year for the Model Y. Most are still believing that the Model Y refresh will happen this year. And so regardless if it starts at the beginning of the year, it's going to impact delivery numbers and production numbers. What's the panel's thoughts on this?
I think that we'll know because we'll get leaks out of Shanghai. So that's my thought, but I kind of suspect you're right, either the end of last quarter of 24 or first quarter of 25. But I have a related question, and it's simply, will the new refresh Model 3 be so popular that the demand out of Europe and the demand in the US is going to be really high, so that it starts actually putting peak Model 3 numbers and maybe even double the peak numbers? It's a mini Model S is why I'm saying it. It's like the greatest Model 3 that's ever existed, and it's a really great Tesla compared to the whole lineup. So I just wonder if anyone else is expecting the demand to be really surprising for it.
I mean, what's the confusing part is that it's not the demand is not showing up in Shanghai in China because the Model Y is priced so similarly to the Model 3 Highland that people are choosing to go with that instead, right? And so the pricing, they I don't know what they were doing with the pricing. That's why I fully assumed that they were going to have a lower price Model 3 Highland to separate out the segments, but that's not what they've done at this point.
I think it's going to do well. I mean, I think it's a sharper looking vehicle. It's got more functions. They've fixed a lot of the nagging issues. The key is like where are they going to put it from a price perspective? But I think it's going to do. I mean, people don't realize. I don't even know if it did Model Y even catch Model 3 yet in terms of total sales, but it was the number one selling EV of all time, and it was 30% of 27 to 30. I think 30% of the mix. So it wasn't a small number. So yeah, I think the product that's the replacement product is better than the product that's replacing. Question is going to be can they get the credit back in North America? But globally, it should do really well.
Yeah, there was rumors that came out in China that the media were reporting that the Model Y Highland is already a Model Y. What is it? The refresh Model Y, that's actually already in place. And then Tesla Shanghai came out immediately and said that that's false. They've done that in the past. We don't know which one's the truth. Emmett, you were talking about leaks, and I don't know, man. Is there any leaks? Tesla's doing a great job, specifically in China. It's very rare that you see any leaks.
I see no leaks out of China, literally none. I get sources all over the place, but not a peep out of China. And it's a little frustrating at times. It doesn't help that their social media ecosystem is so separate from ours. But I don't get any information there.
Okay, so for 2024, the other big thing that we saw was that there's an actual team that's being hired by Tesla to do advertising, video production, high-end, and so forth. So how come nobody here's talked about that? What's the impact of really heavy advertising? What if they started doing significant advertising in 2024? Do we still think that it's going to be a 2.2 million or less?
Wow, that sounds fun. May I ask a related question to the previous topic, and maybe I'm going to pose it to Jeff. And it's simply, why wouldn't they produce the new Model Y in Shanghai this year? What are some reasons that, logical reasons why they would wait?
I don't think there are logical reasons. I think they'll want to get them, from a part reuse perspective, get them as close as together as possible. The only logical thing they've got to do prior to doing that is they got to burn off all the old material. But the way Tesla turns inventory, I don't think they've got a big buildup of piece part inventory. So I think I think the clock on that is when is the design done, and when's the tooling done, and then have they exhausted all of the old material? So there's nothing called excess or obsolescence left over, and that will be the defining trigger to cut the line over.
Thank you. Now, Herbert, to your awesome question, I think there's two things that could be really exciting. One is if Tesla really focuses on what the current cost is for a Tesla, because I think there's just tons of people that don't know and they still think it's an $80,000 car. So if they if they start targeting those consumers that aren't at all connected to the Tesla universe right now, I think that'll be a big boost. And then related, but addressing total cost of ownership to those same potential buyers as well as to the existing buyers, because I think a lot of people don't realize how much lower it is to own a Tesla, whether you're comparing it to an ICE car or to another manufacturer's EV. And with the other manufacturer's EVs, the total quality of life and how much better the battery is and stuff like that is also something they can include in the advertising.
One thing I can add is also for the Model Y. It came out official, I think, 2 years after the Model 3. So I think usually the cycle really changing a huge refresh is about 6 years. So I think at the earliest it would be like end of the year if they did anything with the Model Y for that reason. Like I don't see how the refresh cycle would be different. But what Jeff is saying in terms of parts makes a lot of sense. But it's also a newer model.
Okay, well, I think we can shut this down today. Thank you for reporting on the vehicles and produced and delivered. It was a record year, record quarter. Fantastic effort by the Tesla team for an amazing year when it was a really tough one. Looking forward to 2024, and I think that it's going to look really good. Specifically because of the macros seems to be turning, and things are going to look really good for Tesla as we move forward. Thanks, everybody. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.